Mm. Oh, sorry, your day off, right? So in the last 8 years, I've had multiple accounts, multiple funded accounts, and multiple payouts. And these are 8 of the most important lessons I learned over the last 8 years. Number one is the biggest lesson: time management, time freedom, strong minded, what to avoid, read to accelerate, emotional mastery, expect setbacks, and lastly, control and trust. So let's get into the biggest lesson so far that I've learned. So clarity eliminates hesitation. Hesitation kills results. When you know exactly what you're looking for and why you're entering, you can trade calmly, confidence, decisive, disciplined, instead of emotional, impulsive, second guessing, and reactive. Clarity creates patience. Patience increases results. When you're clear on your criteria and your reasoning for entering, you wait with patience, focus, control, and discipline instead of rushing setups, forcing entries, overtrading, and reacting to every move. Time freedom. Putting in the hours. When you first start trading, you might have to put in way more time than you expected, a decent amount just to get good enough. We're talking more than 10,000 hours. And that is on the low end if you're trying to be great. There are going to be moments where you are off balance with different parts of your life. My best advice is to enjoy it because these moments don't last forever. Buying back your time. When you get good at trading, you literally can buy back your time. You will reach milestones and realize you have a lot more time on your hands that you did before. And you're going to have to adapt to those changes. Strong minded. So let's talk about weak minded. Attributes of a weak mind are: can't control losing money, get nervous when you see a little bit of drawdown on an open trade, treats trading like a casino. And here are some attributes of being strong minded: can handle losing money, being in drawdown, treats trade like a business that pays. Up next, we have what to avoid. What you can't avoid in trading: mistakes, losses, reading the chart wrong. At times, you will make mistakes, not get the best entry, or straight up read the chart wrong. What you can avoid in trading: over trading every day, every week, trading multiple markets, not rushing before you jump into a trade. Read to accelerate. Reading price action over relying on indicators allows you to be much more further ahead. Indicators are delayed price action at times, gives you a heads up before the move ever happens. Reading trading books. So some trading books I recommend are Day Trading for Dummies, which is beginner friendly, and it's the actual first book that I started with on my trading journey. And another advanced intermediate trading book would be Best Losers Wins. And some mindset books to help you out are The Game of Life and How to Win and Atomic Habits. So let's talk about emotional mastery. Control over emotional trading. Emotional trading always ends up in blown accounts. Knowing how many times you allow yourself to trade in a session, day, or week, and sticking to it no matter what sharpens your discipline. Having strict rules, small losses over and over add up quickly. Same goes for small wins. Remember, you're putting your account at risk with every trade you open. Make sure the risk is worth the reward with every single trade. Systematic trading. Systematic trading leads to steady account growth. Having a game plan for not only losses but wins is crucial. What you do after a loss is just as important as to what you do after a win. How long before you trade again after wins and losses have a direct effect on your success. Don't get too overly confident and don't be too doubtful during wins and losses. Be neutral as possible. Expect setbacks. There is no straight path to success. Embrace the journey and the long ride. Trading is not a get rich quick scheme, despite what trading gurus tell you online. It takes real time to develop skills. Losses are only speed bumps. Eventually, you will get to your destination if you have a destination. Take the least path to resistance. Don't get in the way of your own success. Once you have decided that it's okay, it may take 10 years, but you're willing to embrace that, you're already ahead of 90% of traders that fail. The truth is, those that fail in trading are the ones that quit within a month or in the same year. The pain is part of the process. Allow it to make you grow. Control and trust. Control what you can. Don't put too much pressure on yourself. If this is what you want to do and every day you're improving, taking steps to get better, you're already successful mentally. It's only a matter of time for it to show up physically. Don't allow others to put pressure on you. Keep trading to yourself. Let your success speak for itself. Trust the process. You can't connect the dots looking forward. You can only connect them looking backwards. So you have to trust the dots will somehow connect in the future. Steve Jobs. So here is just a quick recap of the 8 lessons I learned over the last 8 years. Biggest lessons: clarity eliminates hesitation, hesitation kills results, clarity creates patience, patience increases results. Time freedom: put in the hours so you can eventually buy back your time. Strong-minded: being a strong-minded individual when trading can seem difficult. Treat trading like a business. What to avoid: over trading every day and week. Trading multiple accounts. Due diligence before entering a trade. Read to accelerate. Price action. Day trading for dummies. Best losers win. A game of life and how to win. Atomic habits. Emotional mastery. Control over emotional trading. Emotional trading blows account. Systematic trading. Steady account growth. Expect setbacks. No straight path to success. Take the least path of resistance. Control and trust. Control what you can and trust the process. And those are the 8 lessons that I learned over the last 8 years. So which one of these will you start implementing in your trading today?